2021 has been a disaster for most retail investors, where most of us are down significantly since the beginning of the year. It's safe to say that 2021 has been no 2020 when it comes to stock market returns, especially for the retail investors out there. On the heels of most of us being down significantly year to date, in today's video, I'm going to be discussing whether it is time to cut your losses in the stock market. Before we start, I want to say thank you to Sean and Nick for recently subscribing to the YouTube channel, and I also want to say thank you to Daniel and Jam for renewing your Rex Nation membership. With that Rex Nation membership, they get access to my buy and sell alerts, my due diligence files, private voice chats, and many more perks. If that interests you, hit the join button down below located right next to the subscribe button. If you don't see the join button, hit the Patreon link that is pinned in a comment down below. Anyways, today I'm going to be using my favorite method as to judge whether or not you should cut your losses or buy more shares of the companies in stocks you own in your portfolio. This method is not named, but we're going to be focusing on one thing, and that is whether or not you would choose to buy the companies and stocks you own outright. Meaning, if you had the cash to pay for that company outright, would you do it? Would it make sense? So in today's video, I'm going to be focusing on two stocks that I know very, very well. And it's possible that you have never heard of these companies before. But after watching this video, you should easily be able to take this method and use it with your own portfolio. I'm just going to be using the two companies, SG Blocks and CleanSpark, ticker symbol SGBX and CLSK in this video. Again, even if you've never heard of these companies, after watching this video, you'll be able to easily apply this method to your own portfolio and decide whether or not you should cut your losses or buy more shares. Alright, so first things first, if you're going to buy a company outright, it means that you're going to pay in cash the equivalent of their current market cap, because the market cap is telling you what the stock market is valuing that company at. In SGBX's case, we can see that the stock market is valuing this company as a whole at just under $40 million. Meaning that if I had $40 million in cash right now and SG Blocks was a private company, I could approach SG Blocks and buy 100% of this company, meaning I would be entitled to their assets, their current and future profits, and all the other good things that come along with owning a business. However, what you also have to realize is that by buying a company outright, you're also entitled to fulfill their debt obligations, you're entitled to their liabilities, you're forced to take care of different lawsuits that may exist against the company, and all these other different negative things. So when we cover this method, you have to take all of those things into account. So let's go ahead and start with SG Blocks here. We've already covered that the market cap is $40 million. If we scroll down on the Yahoo Finance page, we can see that their profit margin is negative 33, almost negative 34%. However, based on the vast due diligence I've done on this company, I believe that this company is going to turn their first profitable quarter in the last quarter of this year or early in 2022. If we scroll down further, I can see that over the past 12 months, they've done $17.74 million in revenue, which is almost half of that current market cap, keep in mind. Also, we can see that this represents 4,522% revenue growth year over year. Then scrolling down to the balance sheet, we can see that this company has almost $11 million in cash, and they're virtually debt-free. That means I don't have interest payments, I wouldn't have interest expense, and all the other payables that come along with having debt outstanding as a company. I also know, based on the vast research I've done on SG Blocks, that it's likely their revenue growth is going to continue to grow at exponential rates that only a handful of companies can match. And if they do indeed start turning a profit, a $40 million market cap makes no sense for this company. So in my eyes, since I own SGBX at a $40 million valuation, I have been adding to my position in this company. If I had $39 million in cash right now, based on these financials alone, I would love to be able to approach the company and buy this company outright for that amount of cash, because based on the financials, I would return much more than $40 million in cash back to my pocket over the next 5 years. Just a side note, if you guys are interested in this company just based on the financials alone, I would highly encourage you to go check out this video that is linked in the top right hand corner. If you're lazy, just hit that I in the top right hand corner right now And I'll also leave a link to a video down in the description below where I talk about this underlying business and what they actually do. By watching this video, you will get a better understanding of where I see the company going in the future with their partnerships with Blink Charging, the potential to enter the cryptocurrency mining space, and all these different catalysts that could be very, very positive for SG Blocks moving forward. But now let's provide yet another example of this, and let's look at CleanSpark, ticker symbol CLSK. If you guys are new to my channel, CleanSpark is probably my favorite stock holding. I think over the next 5-10 years, I'm going to make millions of dollars, honestly, in my investment with CleanSpark, but we'll just have to see what happens. Anyways, right now the current market cap is around $450 million. That number is up significantly just based on the fact that on June 30th of last year, this company was only valued at $25 million. By the way, that's when I started buying this company. So I've already returned plenty of money on my investment here, but I think there's much more to come. Anyways, let's scroll down. We can see that the profit margin is negative 97%, which is a little bit eye-opening. But I know based on the research I've done with CleanSpark that they turned their first profitable quarter last quarter, and they're likely going to be a very profitable company for the rest of its history. So part of beating the markets and getting great return is looking deeper into these numbers. You know, the profit margin negative 97%, again, that's very eye-opening. But if you dig into the company's financials and what they're doing a little bit deeper, like I have noticed, the company turned their first profitable quarter last year, and they're likely to be profitable throughout the company's existence from here on out. If we scroll down further again, we can see over the trailing 12 months, so again, over the past 12 months, CleanSpark has done about $16 million in revenue. At first glance, $16 million in revenue for a $450 million market cap is pretty concerning itself. But I'm going to get back into digging deeper into these companies here. Quarterly revenue growth year over year was still 122%. Again, a number that only a handful of companies in the entire stock market can match. I've also mapped out the revenues that I believe CleanSpark is going to be doing over the next 3 to 5 years. Just recently, this company entered the Bitcoin mining industry. And based on that alone and the way they want to expand, I think in 2023, this revenue number is not going to be 16 million, but it's going to be 1 billion. That's right. I believe in 2023, 2 years from now, this company is going to hit $1 billion in revenue. So all of a sudden, when we start looking at the $450 million market cap on this company, again, if I had $450 million in my pocket and CleanSpark was a private company and I had the ability to approach the company and offer to buy them out for $450 million, you would be insane not to take that deal. Because if they do in fact hit $1 billion in revenue in 2023, well, obviously, with the profit margins on this company close to 80% moving forward, you're going to make a lot of money on that investment and by owning this business outright. We also can see that CleanSpark, as of its last quarterly report, had $160 million of cash on their balance sheet. This goes back to the fact that if I bought CleanSpark outright for $450 million, I would get $160 million of that back right away just based on how much cash this company holds already. Similar to SG Blocks, this company is virtually debt-free. This means that they don't have any interest payments on debt, but it also means that moving forward, if this company needs extra cash, they probably won't dilute shareholders because by holding $160 million in cash on their balance sheet along with over 400 Bitcoins, they can get very favorable terms on a line of credit or a loan. So in both cases with SG Blocks, if I had $40 million to buy this company outright, heck yeah, I'm jumping at that opportunity because over the next 5 years, I'm going to return a lot more money than that $40 million that went out of my pocket to buy the business. So in that case, even though I'm not technically down on my investment in SG Blocks, it still represents a phenomenal buying opportunity for the company on the stock market. It's the same case with CleanSpark. If I had $460 million in my pocket and I could buy CleanSpark outright, heck yeah, man, I'm jumping at that opportunity as well because again, over the next 5 years or so, I'm going to return a lot more money than the $460 million that's leaving my pocket to buy this business. So often with the stock market, our emotions take control of us in a negative way. A good example of this would be the Tesla Model 3 that I own. I paid over $40,000 for that vehicle. And if somebody walked up to me and said, hey, I'm going to buy this vehicle from you for $20,000, do you think I'm going to sell my vehicle to them? Heck no. I can resell my Tesla right now for over $50,000. So why would I take an offer for $20,000? The same thing can translate into the stock market with the stocks you own. With both SG Blocks and CleanSpark, the market is offering a massive discount, meaning that, hey, you can purchase more shares of these companies for a massive discount, or you can choose to sell your shares based on your emotions for a discount and lose money. Let's go back to the Tesla Model 3 example. I would not sell my Tesla Model 3 for $20,000, but if somebody offered to sell me their Tesla Model 3 for $20,000 and the vehicle was in great shape, I would jump at that opportunity and buy that Tesla Model 3, even if I was just going to resell it for a profit. Anyways, guys, I hope this video helped you kind of understand your emotions with the stock market. If the stock market is offering a discount for the stocks you own, it's probably a great buying opportunity. However, if you could not look yourself in the mirror and say, I'm willing to fork out this amount of cash to buy this company outright based on its current financials and where I think the company's going, it's probably a good idea to cut your losses and sell out of that investment. If you have any questions about how to apply this method to your own portfolio, I'll be active down in the comments section below, so feel free to ask any questions you might have. With that, if you're new here or returning and not yet subscribed, I would really appreciate you hitting that subscribe button. If this video was helpful, hit that like button down below. And with that, I'll be back with a brand new video on Friday. Have a great rest of your day. Peace out.